Hello, good morning, everyone. This is Baja Pips. Currently Monday, August 7th, 2023, 9:53 a.m. Eastern China Time. And today I'm going to be doing my weekly technical breakdown. It is currently Asia session in the Forex market. Stock markets are closed and the London exchange opens in a few hours. In this video, I'm going to be setting up some swing trades and I'm going to be getting myself prepared for the week. And as per usual, I do this based off of technicals with a little mix of fundamentals. So I always go over my fundamentals first. So that's what I'm going to do. I'm going to look into the news. So here we have the news. And I look at the economic calendar each week. I also look at it every day because there might be some updates here and there. But just want to see what's going on for the most part. Today is Monday, August 7th, and it is a bank holiday for Canada. So I'm going to be looking to possibly close out my CAD JPY shorts that I had from last week. Those of you that aren't familiar, I update my technical breakdowns by the week. They don't get too many views. It's totally fine. I do this for myself. This is my own personal work. And those of you that do want to follow up, these are just basically my notes. And exactly as I say I'm going to do it, I do it. If there's any modifications, I update y'all through my Twitter. It's going to be in the link below in the description box. But I do this on a weekly basis, and I've been doing this for years. So those of you that are familiar with my weekly technical breakdowns, I start off with the economic calendar. It's the bank holiday, like I said, in Canada. But other than that, I don't really see too much activity going on. And I also look at the 7-day outlook ahead of time, just so I'm not surprised by any interest rates nor anything central bank meetings that might occur that may stir the market up and mess with my pairs. So right now, I don't see much going on. Looks like a lot of medium and low impact news throughout the next couple of days, which is awesome. I like it when it's calm. Usually, when the market has a lot of high impact news, there could be a lot of volatility, but that could also mean a lot of manipulation. And there's some inflation on the 10th, so that's in about 3 days. And then we have the 11th, we have Japan bank holiday, GP. So nothing huge, nothing like really market shifting. So that's great to see. Last week was a pretty big week. We had some interest rates and we had non-farm payroll. So that kind of already set the catalyst for the markets for the rest of the month. If there's anything else, it's probably going to be midterm, like middle of the month announcements, which would come next week. So it's a clear week. That's great to see. And let's get back to the technicals. Here we have a chart of the Euro US dollar. I don't swing trade this because it's the most actively traded pair. I choose to day trade this instead. I like to day trade the Euro USD. It's very liquid. There's a lot of opportunity on a daily basis. And this is something I could do each and every day. And that's day trade the Euro US dollar. So now with that being said, I can't really day trade this right now. It's currently Asian session, and that means that there's low volatility, low movement, and not much movement happening in the Euro US dollar. So I'm going to skip this pair and I'm going to go on to a different pair that might have some more activity. Volkswagen, let's take a look at this. This is a London Stock Exchange pair. At the moment, not much going on. I don't like shorting stocks. I like to go long. I would short it if there is a real bear move. And as of right now, we do have a possible breakout with a nice low continuation to the downside. It's just I would need to see the lows of 117.25 taken out. It could gap down to that this morning when the London Stock Exchange opens. And we could see a run all the way down to 115 0.86 or below. That is a possibility. It's just that it's too close to the edge, too close to the lows for me to really want to be active in this pair. So I'm going to skip that. Let's take a look at the bank. This is a nice potential breakout to the north side. I do see that we were in a range for the past several months. I don't know why this is looking like this. Maybe I could. There we go. So let's get back to what I was saying. This has been going on a downtrend earlier this year. Now we had a breakout and it didn't go anywhere. And then we have a reversal that didn't go anywhere. So D Bank pretty much highlight this. Y'all can see it's a Dutch bank. I don't know how to pronounce it. Deutsche Bank. It's like a German company. So German bank. So we're trapped in the middle of a range right now. Just highlighting a couple areas of confluence so y'all can see the visuals a little bit clearer. We were going down, as you can see, and we had hit a floor and we bottomed out and we started going on up, but we failed to break the highs of 12.37 and we are currently testing the lows of 7.16. So all of this is confluence telling me that we're trapped within a longer term range and price could go anywhere. So trade range bound on this pair if you are looking at Dutch Bank. And just know that we currently have broken out of a consolidation that started in March. And we had about a 14, 15 point rally from those lows. We broke out, but the pullback was just a little bit deep and it went below 9.85. So it went below $10 a share. And at the moment, we are currently I'm expecting a breakout. You see where my alert is set at 10.33. I'm expecting a breakout beyond that. If we can break out beyond that, more than likely we'll be going up, but it still would be a little bit uncertain. I would just have to watch this. I am more in the bullish sentiment for this, so I'll be deploying buy orders on this if and only if it does have a proper setup this week. It's a little too early to make that determination. So that's that. IBE. I want to go over this real quick. Same thing. This one's crashing. It's not really on a downtrend yet, but it is pulling back a little deep. The past week, it was very weak, and that is a little concerning to me because we were on a strong uptrend since October of last year, and we just currently are hit a top right there in July, and we just never really revisited that high, and price went down to yearly. It's testing yearly lows right now. So, like I said, I'm just a little concerned about this pair. We could find some support around yearly lows, but there's no guarantee. So, just kind of watch this, but I don't expect anything just yet. I would love to see maybe a shift back above $11.70. Right now, though, we're in no man's land. I wouldn't advise trading this pair. IBE stands for, once again, I don't want to butcher this name, but Iberdrola. Amazon, nice breakout recently. This is as of Friday. We are currently on the resumption of the bull trend, but there's no setup for me yet. I might have to wait a couple days to see what's going on in real time. But we did have a huge gap up, which kind of broke out of that range that's been going on since the beginning of July. And we have possibly a new takeoff. So that is Amazon for you all. So if you're watching Amazon, just be a little careful of the upcoming resistance above. I'm going to just bring this right there. So 147.80, I would be careful of that resistance as we're getting into that. And if we do clear that resistance, I do expect price to continue to run on up. We could see as high as 170 taken out or at least revisited within the forthcoming weeks. That That's if a new bull rally begins. I'm just going to take this day by day, but I will be deploying longs on this pair as I see the proper setup. Now, if price does go back into the range below 136.83, I'll put the crosshair there right now. So you can see 136.83. If price does but go below and we don't have a proper breakout back to the upside above, then more than likely we'll be going back into consolidation. It does not mean that we're in a bear market. It just means that we're in some consolidation, and that is that. Get on to the next pair. This one is silver. Now we have silver US dollar. So this is silver US dollar. And I've hit my profit to the T. If you checked my weekly technical breakdown a week ago, I was actually bearish where I drew these horizontal lines above. I'll show y'all right now. Silver was a beautiful run to the downside. I called this out on my breakdown last week. I actually had one short that failed and got stopped out. Then there was a second chance opportunity around 24.5, and there was a profit taken around 24.0. And then there was another entry around 24.1, right around the 1st of August, which I was waiting for a possible entry, and I got that short right around 24.238. It is all documented on my previous technical breakdown. And I took that down and I got it all the way down for about 80 points. And I ended up taking profit a little bit before that. You had having my trailing stop hit totally fine. As you can see, it's currently stalling out at that zone. It's documented on my Twitter as well. You can see it's on my threads. All of that. It's all documented. You can see it for yourself. The date, timestamp, it's all there. I took this trade. I did it live in front of y'all. And yeah, just coming at the target. Just another trade. Write it off in the books. Keep it going. So as of right now, we are currently undergoing some profit taking. I am still bearish on this pair. Overall, we started that bear run at the end of July. It was bullish all the way up until the month of July. And then we had some consolidation, strong pullback, and price finally made up its mind and decided on running towards the downside. So as of now, we're going to be testing the lows of 23 and beyond. Now we have a situation right here, and I want to highlight this with a box. So let me insert a box. Just a moment. We'll do that. Insert shapes rectangle. As you can see, there is a box down here below. So here we go. We're at the higher end of that. Now there's a lot of stops from longer term buyers, and these buyers are a little bit shaken. Now, if price continues hitting these lows, more than likely, I call this a magnet area, and it could drop another 90 to 100 points down below. So that's silver in a nutshell. Now, currently, it doesn't show that the silver market is open, and that's totally fine. It is open. It's just moving extremely slow. But it is moving. As of right now, I'm not deploying any type of capital just yet on this pair. I would like to see the lows of 23.03 broken. I'm actually going to bring this trend line down. I have a little horizontal trend line, call it my ray. I'm looking for these current lows to be taken out. If these current lows can be taken out, I believe they were last week's lows, then maybe I'll look for resumption of a bear trend. And like I said, I need to see those lows taken out first. I'm not bullish at all. And if I were to look for a buy, I would need to see the highs of 24.004 taken out, price to pretty much come back into that older range of 24.180 and show a strong thrust towards the upside. Then I might look for some longs, and we could go back to yearly highs. So we'll see what happens with that. As of now, I'm bearish, and I'm going to be looking for some more sells as long as we continue to the downside. Tesla, unfortunately, my Teslas, I closed out of my Tesla longs last week. It just is moving sideways as of last week. Last week was a slow week for stocks, especially the tech stocks. But overall, I'm still bullish. I just, as long as we stay above 238.80, then I'm still going to be bullish. I would preferably like to see last week's range. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of sideways movement. And I'm looking at 273.21 highs of that range to be broken, taken out, and then we might see some new yearly highs. So I'm gonna just keep my eye on this pair for this week. Stocks, they gap because they move overnight while the markets are closed. So that's why they gap on the open. They can gap up or down depending on the market movement and the overnight news. So I'm going to pay attention to that later on. LVMH, this pair is moving trash. It's been moving sideways since May, and we did have a nice uptrend that was going on, but we're testing those lows of 801.71. If the lows of 801.71 are taken out, and the lows of 765 is also taken out because I would need to see momentum since these are so congested. Then we may end up seeing a bear rally to the downside, and that's not good for buyers. So, like I said, I don't like selling stocks unless it's very clear that it's on a downtrend. Right now, it's in the conflict, and I just like to buy. It's easier to buy them, especially when they've been having historical longs the whole time. Just selling against the grain is, to me, it's not the smartest thing to do. And yeah, like I said, preferably I like to buy stocks because historically it's proven to be more successful buying it. When in the past recent year or half year have you seen the market go down? You haven't. Every time there's a short, there has been some decline. This one declined. I don't know how much percent. I don't have the proper tools in front of me right now, but this was a small decline. We can just see it visually right here. And the biggest decline happened back in May of this year, where it dropped almost 1,000 points. And that one right there was a strong decline. And ever since we've been moving sideways. So, we're in a range, more or less, and we could see some new bulls come in. I would not be coming in until, let's say, the highs of 871.63 is taken out. And until then, I'm going to be sitting on my hands for LVMH. LVMH stands for Louis Vuitton Moet Hennessy. And yeah, that's it for that. Get into my CAD JPYs. I'm currently, I was short on CAD JPY. I don't know exactly what happened. Must have just recently closed out. I'm going to show you all that in just a moment. But I was short on CAD JPY just until recently. 4-hour wanted to go on up, close on out. So finally, we're experiencing a slight pullback on CAD JPY. I don't know how long it's going to pull back for, but it is Sunday. Sunday could be a little bit of a choppy day, and I don't trade. I mean, it's currently Sunday on the East Coast. It's Monday over here in China. Sunday, Monday for me. It could be a little choppy, a little grindy, and this could just be a false breakout to the north side of the market before another drop to the downside. Ultimately, I'll be aiming for 155 pips, about 160 pips to 104.2. Those are the next lows that I expect us to revisit. We just recently broke out of the 106.1. You could kind of see that. I'm going to just draw it for visual representation. So we have these little swing lows right here, right around 106.1. And we did break those lows. We're currently retesting it. And so this is totally fine, totally normal. I did have a 5-minute stop out. So on Friday, I collected 3R on my trade. And we can see right here, it's just been congested sideways. This is another one of my CDJPY charts. It's been moving up, down, and we failed to break out. So I did have a trailing stop right there. It was a nice drop. It was a nice run. Overall, I did collect my profits. Once again, that trade is on my Twitter. So those of you that are wondering, you can always check it out on my Twitter. I don't check out other JPY pairs, um, really, but UJ, we have a same. It all pretty much correlates. They move a little differently, but for the most part, they correlate. And we can see that USD JPY currently is doing pretty much a similar thing. It broke out of 142. You can see I did draw that line, and that confluence is a real big thing. It dropped out of those lows, and we are currently pulling back. But there's nothing I can do right now unless we break below 141.5. That is a nice top formation. We could at least see prices drop to first 143.60 and as low as 138, 137 area. And as of right now, though, I am going to look to continue the sell bear rally across the JPY pairs. Now, if we do see a reversal, a pop back above 142.6, I'm going to mark that up right here. So you see a rally, a drive back above 142.6, 142.8, 142.9, like around that area. As close to 143 as possible. We may start to see price start to reject those lows and climb back on up, because overall we are still pretty bullish, but we have descended back into the older range that's been going on since July, and that is just a little alarming to me. So maybe we could I'm neutral on this pair. Longer term bullish, but for the midterm neutral. That's that. NZDCHF. We are currently bearish. We just broke out of a month-long range, almost a month-long range. It's currently the 7th of August, so back a month ago, and that's when this range started. About 3 weeks going on now. So we broke out of a range that was actually going on. It was a bigger range. It was going on for about 200 days. That's a 4-hour chart, so not 200 days. Apologies for that. It's been going on since beginning of June, and we have broken out of that. And it was a large enough range for a nice sell towards the beginning of July if you wanted to short it. But we broke out of that, and it was supposed to be a bear trend at the middle of July. Looks like price was having trouble breaking on lower, and it consolidated and went into a longer term range. And there was nothing for me to really take, so I was not paying any attention to this pair. So if you look back at my previous technical breakdowns, you could actually see every time I went to NZDCHF, I'd say, it's in a range, it's in a range, it's in a range, and it's been ranging. So recently we did break those lows. I did mark the lows off around 0.532, just give or take estimate. And we are currently undergoing a pullback. The pullback is a little deep and the breakout was a little weak. So what that's telling me is that we might have a reversal back towards the higher end of this range. It looks like a possible bottom formation. And I'm going to pay attention to this because I'm going to be looking for some possible buys back to the higher end of this range around 0.54157. It's only 64 pips though, so I'm not sure if I really want to take that type of trade because it's so tight and congested. It's such little movement that I'm a little concerned about taking that type of trade. But if the setup is there, I'm definitely going to do that. Ideally though, I would like to see this downtrend continue. I would like to see a stronger breakout. For me, I need to see price break below the lows of here 0.52997, so around 0.53 psychological zone. I would like to see price break below those lows before I look for some more shorts, but that's NZDCHF in a nutshell. Let's take a look at Euro AUD. We are currently bullish on this pair. This is my very first time seeing all of these pairs, by the way. I did not do any pre-market prep. This is raw. This is in front of you in real time. That's how I like to do my technical breakdowns. Gets the mind going, gets me non-biased views of the market for the beginning of the week. I don't stay attached to any trade. I follow price action, and I don't really care about the fundamental numbers. More or less, whatever price is telling me, the price is king. It tells me what it tells me, and I just follow through. But as of right now, we are undergoing a current bull trend on Euro AUD. It looks very strong. Looks like buyers have regained control after being wiped out during interest rates in June. And we can see that price had a sharp recovery, and it had a little struggle, not gonna lie. It definitely had a little struggle. I was expecting it to break beyond 1.64997 ish. And it finally did after congestion in that little range that we see right here from the 28th of June all the way to 31st. So it lasted a few days and we finally seen a break. But you see that I have my horizontal line right above. So this is my next resistance area. I expected it to revisit right around 1.67896. I need price to break higher. I don't feel comfortable buying it just yet. It's a little too early for me to buy, even though it is bullish. It's strong magnitude, a lot of good buying momentum towards the upside. I just need to see that high broken because once it comes to a significant high or low, I need to see that area taken out before deploying any capital. So I'm bullish on this pair, but I'm going to wait a few days to see a real true breakout. And then I'm going to look to deploy more capital on this as we continue on with the month. Nvidia. Nvidia is a stock that I've been watching as well. Beautiful uptrend, as y'all can see. Since December, it has been bullish. Had a nice, strong rally. And this is of recent time. So December, January, February, this entire year, Nvidia. Nvidia is a tech stock on the NASDAQ exchange. For those of you that want to know, I trade NASDAQ. I trade the S&P 500. I trade the NYSE stocks. I trade the London Stock Exchange. I trade commodities, precious metals. I trade Forex, everything. So that's why I have such a diverse technical breakdown, because I like to do this. It's just who I am. You trade what you like to trade. This is what I like to do, just so I can have a broader scope of the markets. Um, I don't like to stick to just one market because, sometimes that specific market could really be going into no movement or low movement or a lot of manipulation for a certain time. And that could last from days to weeks to months. So if a market is not really performing well, I could always dab into another market that may be performing well. That's the great nature of trading. You have the power to do that. So that's just me just kind of highlighting that, breaking that down. Nvidia, we are currently, same thing. It's a NASDAQ pair, just like the previous NASDAQ pair. I broke down Amazon and Tesla. They are all undergoing the same sideways movement. So I'm waiting for a break above 479.89 around that area, or a possible continuation north. Right now, we are in a range that's been lasting several days. So I'm going to get back to that a later date. Apple bearish. We're not in a bear rally yet, but we are undergoing some huge drawdown. This is the biggest drawdown in the past couple of months. It's the lowest of the quarter. And it's just a little alarming for Apple. Not every pair in the NASDAQ is going to move the same. NASDAQ is an index, it's an indice, and Apple is just a stock within it. So, Apple, we need to see a strong recovery back above that horizontal line I drew. I'm actually going to change it now. I need to see the break of 198 for me to go long again. It could be a fake out. We could see a mean fake out and a gap back up and a reversal back to the upside. I would like to see it break above 200. Maybe that's the reason why it was heavy profit taking right at 200. It's a psychological zone. It is yearly highs. It could even be all-time highs. Let's check the weekly. Nah, definitely not all-time highs, but it's definitely yearly highs. It's definitely 2-year highs and definitely 3-year highs. We see 2020, it was extremely high. But yeah, that's Apple and Apple in a nutshell. I'm going to skip over GJ, but we could take a quick look at this real quick. Same thing as CJ, same thing as UJ. I'm not going to waste my time on this. USD CHF, very similar to NZD CHF, but as you can see, it is moving quite differently. So this does not correlate fully with NZD-CHF, which is awesome because it does give a different narrative of the overall CHF pair, because you can see another pair in the against it in the basket. So right now, we are undergoing a possible pullback to the downside. I would like to see a nice top formation. So 0.86944, I would look to see that low get taken out, and then we can see as it can go as low as it wants to the lower end of this range that's been going on, 0.85798. This is actually a same thing, as it's just a different context. So NZD CHF, that pair, like I was just looking at, um, I can actually go back to it real quick. I'm actually looking for a breakout continuation. So I'm looking for a trend continuation to the south side to new lows. So it's still bearish, but as you can see, USD CHF just a little bit different. It's still bearish overall, but it's at the top of the range. And I'm looking for it to go towards the bottom of the range. So if it could reverse, that means it's indicating a false breakout north, and we could start to see it go down. GBP USD. I did not break down Euro USD, so I'll do GU real quick. We are currently bearish longer term, but short term we could see a nice rally. I would like to see 127.9 taken out before continuing its rally north to 129.09, around that area. That would be a nice bottom formation. We are in a longer term, much larger range. I'm going to mark that off right now so y'all can see. It's a pretty massive range on GU. This is what I mean by the Euro USD, GBP USD kind of move similar, but GBP USD is a little bit more volatile, and because of Great Britain and the pound. But yeah, we can see pretty much it has been declining for the past month, and we recently had a nice bullish move towards the upside. If you missed the first rally, this looks like a possible continuation of that rally. I would like to see, mark this off with the trend line right now. I would preferably like to see the highs of one right here, 1.27923 taken out before that rally continues. I don't really care about to the left. If you look to the left of that, there were some swing highs. I don't really care about these swing highs. More or less, I'm looking at these swing highs to be taken out next around 128.852. And yeah, as of right now, it's longer term bearish, but short term bullish. And I wouldn't really care about any sells right now. It looks like we have hit a bottom. So unless we can hit these lows of 125.853 around that area, I would stay bullish and continue deploying capital on the long side. Google, once again, NASDAQ pair. NASDAQ, if you look at the NASDAQ, there's an index you could just trade the whole entire thing as a whole. It tells the entire health. Look at that. AUD USD, similar to GU, it's currently undergoing, it broke out. I'll mark this one on up right here. It broke out 2-month lows, but the retest is kind of strong right now. The breakout was strong as well, so I was expecting a nice sell off. But if we don't get that, and it pops above these most recent highs, I'm going to mark that off as well. Pops above the most recent highs around 0.66156. Looks like it's doing that right now. We could see a nice rally towards the upside, and that's it for AUD USD. GBP AUD, we don't really have too much going on, just like Euro AUD, but we did have a nice breakout recently, and it kind of just congested, so I would need to see more of a setup for that. Here's gold. For those of you that like to see gold, similar to silver, profit taken. I was also bearish on gold, and it hit that profit target to the T. But right now we are reversing with a possible bottom formation back north. I do see that on gold, but I'm going to take it little by little. But right now we could see a nice rally on gold, because longer term I was bullish. We did end up going short, so we are in a conflict. We're just in a big ass range. Like, I'm going to mark these lows off right here. That range is actually pretty massive as well. And that's why I said that we're long, but we have been short. but we could go back long at any time. It's kind of conflicting, but I would just take this little by little. I would not invest in this longer term. Looks like we've been ranging since May. And yeah, that's it for gold. AUD CAD. Let's see. It's like we're pretty bullish on this. I might actually deploy some longs on AUD CAD any moment now. I'm going to take a look after this, this video. And that's it, y'all. I broke down enough pairs. I'm not going to go on. But this has been a weekly technical breakdown. I hope y'all enjoy this. I appreciate doing this in front of y'all each and every week. It's just something I enjoy doing. It's nothing that I make money off of. It's just purely me doing my homework and sharing it with the world. And here y'all go. You can see everything kind of happening the way it is. It's been weekly technical breakdown. And as of August 7th, 2023, y'all have a safe week trading. Don't risk more than 1% per trade. Always look out for the news ahead. Make sure you're not trading on any crazy high impact catalyst moving news. And learn your price action. Learn your price action. It'll save you from a lot of trouble. Learn your price action before you start trading with real capital. Don't know price action. Have not mastered your system. Don't even have a trading plan. You should not be trading real capital. Just take my advice. Demo, study, practice until you are fully refined to the point where you can do this like me. Just read it fluently. I've read every market in real time, telling the truth, as y'all can see. Like, there's nothing for me to, can't really rehearse this, but I just broke down over 15 pairs in front of you. So yeah, it's right there, documented. Go back at the beginning of the video, watch the recording again, and trade safe, y'all. Peace.